Hey, hello everyone. It's Tuesday, May 24th, 2022. I'm so excited to be here and talk a little bit about one of the options trading strategies that I use on a regular basis to generate an income. And now this presentation is mainly for, those investors that are either new or beginning to option trading, but I welcome everyone to participate. I've got uh, um, lots of great information I want to share. So for some of you that may have already been option trading, some of this may be a review for you. Uh, I invite you to stick around, listen in. You might pick up something new, or you've got an opinion on something or something that you want to share. Be sure to type it into the chat and let me know. We can discuss it. So I welcome your opinions, or if you want to share information as well, come on over, jump on in, and let's talk about it. Okay. Like I said, it's all about sharing the information. I'm hoping to enlighten everyone with what I've been doing with my option trading. I use it on a regular basis to generate a monthly income. And I'm nobody special. I'm just a random guy on YouTube, really, who started documenting what I've been doing, and so I want to share what I'm doing so that others can take advantage of the mistakes I make, the information that I'm sharing, and maybe it's enough to get you interested into options trading yourself. And you can maybe generate some income for yourself just the same way that I do it. Okay. All right. Let me go ahead and make these slides a little bit bigger here so we can take a look and see here. Again, um, my name is Jim Ray. I have the Simple Option Trading channel on YouTube. And so one of the things that I like to do is to have live, live session, webinar where I can teach some of the concepts and ideas that I've been using for options trading. And so that's what this is all about. And I want to go through some of the things that I'm doing, but also I'm going to invite all of you to participate, use the chat, share information that you've got, and maybe you want to ask questions as well. Maybe I'm not clear about something I'm discussing. And so I welcome you to go ahead and leave a comment into the chat box, and we can talk about it further. Maybe you got questions. Maybe I didn't explain something properly, and so I welcome you to let me know what I'm doing wrong. Okay, because if there's information you need that I'm not covering it, well, then I need to know that. That way, the next time I have a live stream, I can make it better for you and for everyone else. All right, that makes sense. I hope so. All right, let's get started. Um, so in this presentation, I'm going to be talking about what I do to trade stock options. And my promise to you is to share what I'm doing as far as options trading. And I'm going to show you how I'm generating a monthly income. Because at the end of the day, that's what it's really about, right? It's I'm doing something with my options trading and I'm being able to generate an income from it. And so that's what I want to share with you, my audience, to let you know what I'm doing. Now, I'm not recommending anybody do this. I'm not trying to advise anyone. Um, I'm not saying do this as a financial advisor. I'm not saying to do this as a trader. I'm just showing you what I'm doing as a part of this process. And at the end of the day, it's really up to you. What do you want to do? And maybe this presentation gives you more information because you may have questions about it. Maybe you're considering options trading, but you're not really sure, right? You might be on the fence one way or the other. And so hopefully this gives you some idea of what's possible, at least from where I'm sitting, right? My perspective. And I'm not the be all end all expert, right? But I want to share with you what I'm doing, and maybe it has some information that will help you make your decision whether options trading is good for you, something you want to try, or get better at, maybe improve what you're already doing, or maybe it's not for you, and that's cool as well. Okay, so that's my promise, right? Show you what I'm doing, give you some documented proof, and let you know how I'm generating a monthly income using stock options. Let me go ahead and move this out of the way so it's a little bit easier for you to see. I think we know what the day is, right? I already covered that. And one of the things that I hope you walk away with as well is the fact that as I'm going this presentation, I mentioned that I'm just a random guy on YouTube. I don't have a financial background. I don't have an economics background. Nothing like that. But what I needed to do was do this options trading without having a lot of technical knowledge, right? So there are experts that are very accomplished and very skilled day traders, swing traders. There's advisors, that do really well with this, and they understand the nuts and bolts down to the minute level, all the different ins and outs, all the economics, all of the different relationships, the functions, the mathematics behind it all. And what I do is simple option trading is I try to make it simple, try to make it easy, and that's really what works for me, and maybe it will work for you as well. And then the other thing is, I want to dispel the rumor that in order to do options trading, it requires thousands and thousands of dollars, right? Unless you've got, the $100,000 or whatever this large account is, you can't do options trading, and that's really not the case. And so what I'm hoping to share with you today in this presentation is how I'm also able to do option trading, even though I've got an average side account. I'm not a millionaire by any stretch of the imagination, but I don't have a tiny account either. But I want to show you some trades that I do that involve smaller type trades, right? So if you have a smaller type account, this could also be for you. So don't automatically discount that you can't be an options trader just because you don't have $100,000 in your trading account. Okay. That's just simply not the case. But let's go through and talk a little bit more about this. Now, I talked a little bit about this last week about the magic behind stock options. A lot of people think because, you know, uh, you may hear people talking about how they're able to make all this money using stock options, and unless you know the ins and outs or what's behind it, it may seem like magic, but it's really not. It's a known process. Lots of people do options trading. And one of the things I like about it is I can do options trading without actually having to own stocks. Now, last week I talked about covered calls, where I actually own stocks in my portfolio. Well, this week I'm going to do a little bit something different, because one of the comments that I received, or some of the comments I received, were, hey, I don't own any stocks in my portfolio, or I've only got a few stocks. That means I can't do options trading. And so I wanted to say, time out. That's not really the case. You don't have to have stocks in your portfolio in order to participate and make money trading stock options. And so that's one of the things I want to um, share with everyone, make the awareness, educate those viewers that may not understand fully about how options work, and that there's other avenues or opportunities available to do options trading, even though you don't have stocks in your portfolio. So in this particular video, I'm going to be talking about cash secured puts. It's one of the 7 main options trading strategies that I use to generate an income. Now, I've got a list here. You can see the primary strategies that I use for options trading, but I really only want to focus on this one. It's strategy number 2. It's called the cash secure put option. And so as we get more into it, I'm going to explain what it is and how they work. But first, you need a little bit of background about how I got here. What's my background? What gives me the right to make this video? Well, I kind of walked the walk. I had to learn it the hard way. And so I want to explain how I got here. And there's 2 major events that really affected moving me towards doing stock options. And if you bear with me, I've got about 60 seconds. I want to explain where I came from and how I got here. Let me go ahead and move my face out of the way. There we go. So in 1990, roughly, I started options trading. And those 2 major events happened in between the time I started in 1990 and today. And let me briefly explain what they were. So in this first event, which, up until that time, I've been doing buy and hold investing, right? So I buy stocks and I just hold them. I buy stocks and I hold them. And the whole intent there was to accumulate a portfolio of stocks that I would hope would rise in value over time. So by the time I retired, I'd have this basket of stocks, or this portfolio of stocks, that would be worth more than what I paid for, right? And I would just as a way of accumulating wealth. Well, this first event happened in February of 2014, when Robinhood announced that they were doing or introducing zero commission stock trades. When this is a pretty big deal, because up until that time, every time I did an option trade, I was required to pay my stockbroker a commission in order to execute a trade. So if I wanted to buy 1 share of stock, depending on the broker, I might have to pay $15 or $14.95 or $9.95. And so every trade, whether I bought stock or sold it, and it didn't matter how many shares, whether it was one share or 100 or 1,000, I still had to pay that commission. Well, in February 2014, Robinhood introduced their mobile trading platform, and they said, hey, if you trade over here, there's zero commission. And so what that did was it allowed me to do trades, buying and selling of stocks without having to pay a commission, which was huge at the time. And now, if you'll notice, the majority of the stockbrokers now, or discount brokers, offer zero commission trades. So this really opened up trading not only for myself but the entire community. And so this made it really accessible for everyone to take advantage of. And so at that point, then I started swing trading. Now, if you're not familiar with swing trading, it's where I buy and sell stocks that I'm holding for, could be anywhere from 2 days to a week to maybe 2 weeks, as opposed to being in a buy and hold trader or a buy and hold investor, where I'd buy a stock and just hold on to it, for 40 years until I retire, or a day trader where I might buy and sell a stock that same day, right? I might buy it in the morning and sell it before the market closes on that same day. So that's not that's day trading, but as a swing trader, I'd be looking for stocks that had some momentum to them that I could take advantage of. And so whether it's I'd buy it on Monday and sell it on Wednesday, or a couple days in there, and I would eventually sell out of that trade and reduce my exposure at that point. So I was doing a lot of swing trading once the zero commission structure opened up, because I didn't have to pay the commission. And then the second event occurred in March of 22, right? So we had that global pandemic, which affected everyone everywhere. And it didn't matter who you were, what country you were from, or what you were doing. The global pandemic hit. And the end result, or the big result in the financial world, in my world specifically, is we saw the stock market go down. So I'm showing you a daily chart here, where we can see the events, or the stock history, the price history of the QQQ and the SPY, the S&P 500, leading up to March of 2020. And you can see what happens. That big red arrow is showing you, man, once that pandemic hit, it affected a lot of businesses, industries, largely the hospitality industry, right? So airlines weren't flying anywhere, people weren't flying anywhere, which meant people weren't traveling to destinations. So the hotel industry got hit, as well as things like restaurants. So we saw a lot of the companies that were B2C, the business to consumer, especially in the travel industry or hospitality industry, get hit by this. And as a result, things started falling, right? So everybody's stock prices started falling, and then we had a recovery from that. Well, as a part of that recovery, um, you know, things started to open up. And as a result, whoops, there we go. I started doing a lot of options trading, because at that point, I wanted to get back into the recovery, that V-shaped recovery. I wanted to get back into the market. And, one of the things that I had to look at, as part of that recovery, one of the things I had to look at was the fact that, you know, I can only buy and hold so many stocks, but options allowed me to leverage the cash that I had in order to take advantage of some opportunities, right? So maybe with the amount of cash I had at the time, I could only buy 100 shares of a certain company. But if I used options, that allowed me to get more exposure to different companies using less money. And so I was able to take advantage of the fact that, we're in this V-shaped recovery. I've got a finite amount of money, and I don't want to put it all into one stock, or very few stocks. Rather, I had the opportunity now to use options, kind of like an afterburner for my option for my investing and trading. And so I really started focusing more and more on options trading. And so as a part of that, over time, where did I get to? Let me see if I can move this back out of the way here. I started doing options trading a lot. And from that time, 2020 to today, um, I've done hundreds and hundreds of options trades, and I might even have 1,000 now at the time. I'm not sure. I'll have to go ahead and do a check, but I've got a lot of option trades. So I've made a lot of money. I've lost a lot of money. I've made mistakes. I figured out what the mistakes were, and I've tried to recover from those mistakes so that I never do those those things again. And so that's part of what I want to do is take advantage of the fact that I've made these mistakes. I've documented them on my YouTube channel, and hopefully someone is able to watch those videos and take advantage of what did I learn, what mistakes did I make, so they can avoid it themselves. Now I know a lot of people, they need to see it or experience it for themselves, and that's cool. I understand, but I've been documenting my journey as I learn about options more and more, and use them as a way to generate income. And so I've got some proof out there that's publicly available, if you will. All right. But now in this video, I'm going to be talking about cash secured puts and why I love them, right? So it's a way for me to do options trading without actually having to own the stocks. And I'll explain that, how that works. But just understand right now that a cash secure put option, the way that I use them, I sell cash secure put options, means I don't have to own the stocks when I initially sell the option contract. And I'll explain how that works. Similarly, because I am selling a cash secure put option contract and I don't own the shares, if I do end up getting the shares, so at the end of the contract, whatever the expiration date, if the shares get assigned to me, what it means, if I structure it correctly, I'm able to acquire those shares at a discount. And if for example, if Apple stock is trading today at $130, $140 per share, and I sell a cash secure put that expires in a month, I'll configure my cash secure put option contract so that at the end of the month, 30 days from now, if I end up getting assigned those shares, I'll pay $120 per share. And so I'm going to show you how that works. And that's one of the secrets or the magic behind stock options. All right, let me cut real quick to a short little thing I've got here. See, the best way to do this is if I do that, and then I bring in these other slides. I got two quick slides that I want to share with all of you. So this first slide is, and I talked about it last week, right? It's a cash secure put option contract. What is it? Well, basically, it's a contract between two parties, a buyer and a seller, where they agreed to trade an underlying security at a set execution price or a set price during a specified time frame. So I'll walk you through this real quick. So I've got the option contract, and this example, I'm talking about a cash secure put option contract, and that contract controls 100 shares. And you can see the seller on the left in green, and then the buyer on the right wearing white. Now, that option contract deals with a certain stock, and that's known as the underlying stock or the underlying security. So for this example, it's ABC Incorporated. It could easily be Tesla or Apple or Coca-Cola, Wells Fargo, Bank of America. But this option contract deals with or it's associated with that underlying stock. Now, it's got an expiration date to it, so it tells you how long is that option contract good for. And it starts at the time that the buyer and seller agree to the terms and conditions of the contract until the expiration date. So that could be a month, or it could be a week, or it could be a year. Between the buyer and seller, they decide how long they want that expiration date for, and they'll set that up, and that's explicitly specified in the option contract. And then lastly, it's the strike price. And this is the price that the seller and the buyer agree that if this option contract gets exercised, they're going to use that price, that agreed upon price, that strike price for the execution of that option contract. Okay. Very quickly, let me walk you through what this looks like. Okay. So as the seller, let's say I'm interested in selling a cash secure put option contract. What that means is that I've got some collateral in my back pocket or in my trading account that's associated with me selling this particular cash secure put. And that's money. That money is reserved, and it's reserved collateral. And what that does is it guarantees that I'm able to purchase the shares, because in this cash secure put option contract, I'm guaranteeing that I'm willing to purchase the shares. I know it sounds funny, me being the seller, but I'm selling the option contract. And what I'm selling is the fact that I guarantee that I will buy the shares at the strike price. And so that collateral amount is calculated very simply by taking whatever the strike price is times 100 shares. Now, the strike price in this case is $50. And from the previous slide, we saw that one option contract controls 100 shares. So in this example, this one option contract, um, the way I calculate, or anyone calculates the collateral amount, is they take the strike price, the $50, or whatever the strike price happens to be, multiplied by the 100 shares because it's one contract, which means I need to reserve $5,000 as my collateral. Now, guess what happens if it's two contracts, right? So two contracts, 200 shares, it would be $50 times the 200 shares. I would need to reserve $10,000 as my collateral. Now, that collateral is not getting spent. It's still in my trading account. It's just reserved or earmarked um, uh, as being obligated to the option contract, which means that I can't touch it. It's still in my account. That $5,000 is still in my account, but I'm not allowed to touch it because I've reserved it as a way to secure the put contract. And so that's why it's a cash secured put option contract. Now, when I sell this cash secure put option contract, I put it out there on the market, and the buyers in the stock market can review the terms and conditions that I specified in my option contract, right? It's for company ABC. It's got a September 27th, 2022 expiration date, and it's got a $50 strike price. Is anyone interested in buying this option contract from me? Now, if there's a buyer that likes those terms and conditions, they'll want to buy that contract for me. And the way they do that is by submitting a payment for that option contract. So they're going to pay me, the seller of the option contract. They're going to pay me something called a premium, and that's an amount of money that shows up in exchange for the option contract, right? So I'm selling the option contract, and I'm receiving a payment or the premium. So that's what you see here, is that the option contract goes to the buyer, and I receive the premium. And now the buyer holds that option contract, not literally, but they've got control of that option contract, which allows them to exercise the option. So if they take that option contract at some point in time before the expiration date, that person who bought the contract can now exercise it and say, hey, uh, we're going to exercise this option contract for these shares before the expiration date at this strike price. Okay. So that's kind of how that works. And what you need to know then is if the price is favorable to the buyer before the expiration date, on or before the expiration date, if the market price and the strike price are favorable to the buyer, that buyer will actually exercise the contract. And what that means is, in this particular case, let's say that we see an example here where the strike price is $50. It's got the September 27th expiration date. But let's say we get to the expiration date and the actual stock price is $49. What do you think the buyer does of the option contract? They're going to exercise that option contract because what that allows them to do is, even though the current market price is $49, they know that I have to pay $50 in exchange for the shares. They're going to get an automatic $1 per share in price appreciation, and I'm forced to pay that $50 because that's what I agreed to. That's my strike price. Now, on the flip side, let's say that the market price is $51, which is above the strike price, right? And at that point, the terms and conditions of the option contract aren't met, so that option contract actually expires worthless. And as a result, I keep my collateral. That the money reserved as my collateral, that's released and returned back, or not returned, but released back into my account, and I keep the premium. And so that's a key factor there is I'm really looking for the option contract to expire worthless because number one, I want to keep my collateral. I don't really want to buy the shares. I mean, I'm okay owning the shares, but if I don't have to, I won't. Plus, I get to keep the premium on top of that. So that's a way for me to make some extra money. And sure enough, right? So when the option contract is out there, I received the premium for it, and that's my money to keep forever. All right, let's go back to the other presentation now, real quick. So I've talked a little bit about stock options and the mechanics behind how a cash secure put option works, right? Me as the seller of the option contract, and how I can make money from it by collecting the premium payment. All right, get back into presentation mode here. So we walked through that. Um, Let me show you a real example. Let's review a real example where I actually went through and did this trade, and you'll be able to see the profit that I secured because of it. Now, what I did is I pulled an actual transaction record from my account history, and I'm going to share that information with you because I want to be transparent with what I did, and you'll see how much money I made from it. So let's start off. At the top left-hand corner, you can see that the stock symbol is ENPH. So that's end phase. The strike price was $170. It was a put option, and it had an expiration date of January 21st of 2022. So you can see I sold the cash secure put for stock symbol ENPH with a $170 strike price and an expiration of January 21st of 2022. Now I submitted this order. I put it up for sale on December 20th. So 30 days before. So this is a 1-month option contract. So I sold it on December 20th, and it got filled that trading day at 12:45 p.m. Pacific time. So almost the close of the market from Pacific standpoint. And when the option contract got filled, the premium I was paid was $9.75 per share. Right now, we know that one option contract has 100 shares. So as a result, I received a total premium payment of $975, and so that was my money in return for the option contract. I received that money, and that money's mine to keep in exchange for the option contract that I sold. And so here's a case where I sold this option contract and I received $975. Um, if we look at how much money did I reserve as my collateral, well, it's the $170, that strike price, times 100. So I reserved $17,000 as my collateral. And in return, after I sold the option contract, I received $975. And so if we look at that as a return on my investment of 17,000, it's just over 5.5%, 5.7%. For this 1-month option contract. And so this was a way for me to generate some income with some cash that was in my account. I just reserved it. I didn't actually leave my account. I just reserved it. I sold the cash secure put, and I received $975 as my premium payment. So that $975 is mine to keep no matter what happens. If the option contract gets exercised, and I get assigned the shares, that money's mine to keep. The $975 is mine to keep. Or if the option contract expires worthless, that $975 is still mine to keep. So that money's mine to keep forever, no matter what. And I could withdraw it and use it to make a car payment, or take my family out to dinner, or splurge and buy some clothing or whatever I want. Or I could just keep it in my account and use it for a different option trade. All right. Uh, I've kind of mentioned that I'm not a financial expert. I don't have any financial education background. I don't have any special skills or experience. And as far as my math skills, I'm not a math expert, right? I can balance a checkbook and things like that, but I'm not an expert by any stretch of the imagination. And so, and the reason I want to mention that is because I have my simple option trading approach that I use. And it's actually pretty easy for myself and others to use it. And I specifically wanted to have an approach that was easy to use and didn't require a lot of math heavy skills. Now, granted, because of that, I don't take advantage of a lot of the nuances or the fine tuning, right? So you put me up against a professional options trader, and we may execute the same trade, but that professional options trader has an advantage because they're looking at some of those um, background information, like something called the Greeks, or maybe they've got some special formulas that they're using to evaluate a trade, and so they know more precisely when to get in or when to get out of a trade. And so I may only get 80% of the value where they would get 100% of the value. Now, for me, I'll take 80% profit versus, and give up that extra 20% just because I'm not the expert and I'm not trying to be. But it makes my life easier. So I want to concede to the fact that I'm not an expert. Um, I know there's money that's being left on the table, but that's okay with me, right? I'm okay making the 80%. I don't have to make the full 100%. I think it's awesome. The folks that do want to get that extra bit, more power to you. That's not what I'm about. I'm about doing simple option trading. Um, and kind of to my point, because I've been successful doing this, I wanted to share it with the people I love, and in particular, my son. Right. So at the time, I taught him uh, how to do my simple option trading approach. He was a high school student at the time, and so you kind of get the idea, right? So he's not a college graduate. He's got basic math skills, um, and not a whole lot of life experience, right? So he's not out there balancing checkbooks and getting credit cards and evaluating car loans and all that. He's a normal kid in high school with basic math skills. And so I was able to teach him how to do um, my simple option trading approach, so he could become self-sufficient and do it for himself. Because that's one of the things I wanted to do, was share what I was doing to make money. I want my son to be able to do the same thing. Now, if any of you have teenagers, or you have nieces or nephews, your own kids that are teenagers, or any kids actually nowadays, you know that one of the challenges that I faced, or you'll understand one of the challenges I faced trying to teach my son simple option trading, was the fact that I had to compete with his cell phone, right? So um, anytime his smartphone would bing, or you'd get a text message or whatever, it's the first thing he does is he takes a look at his cell phone because he wants to find out what his buddies are doing or whatever. And so it made it difficult for me to train him. So what I ended up doing was recording a series of videos so that he could learn my simple option trading strategy on his own, and I made that available for him, so whenever he was ready, he could dedicate his time. Because it got frustrating, right? I'm trying to teach him and he's, distracted or whatever. I made the videos available. He could watch them on his own and learn how to do it for himself. So it was a great exercise for myself, but for him as well, right? He comes out the beneficiary of learning how to do it, and I keep my sanity because I didn't have to compete with, the technology of today. So I did create some courses that he's allowed to use, or he could get access to. And you can get access to them on my Discord site. I'm going to start making them available. It's discord.simpleoptiontrading.com. And the other thing that I struggle with is when I tell people what I do, or when I was actually telling my son, um, the thought was, well, it takes a lot of money to do options trading, right? You can't just walk in there and start doing options trading. You got to have a ton of money. Now, I will admit it takes money to make money, but it doesn't take a lot, or it doesn't have to take a lot. I hear people talking about $100,000, and I'll tell them no, it doesn't take that much. 10,000 or 1,000. Now, the more money you have, the more money you have more potential to make more money. But I'm going to share with you an example where I can regularly do option trading using a smaller type account. And I'll show you some option trades where I have less than $500 as part of my transactions, and I'm able to do this particular option trading strategy. These cash secure puts, I have $500 in my account, or I have a made up an account with a $500 limit, and I was able to make some option trades, cash secure put option trades, with the $500 in my account, and make a profit from it. And then, as a part of that, if you go to my YouTube channel, I've got a number of videos that I published and shared on my YouTube channel, Simple Option Trading, where I show myself doing these small account option strategies. So I try to document what I'm doing, as I mentioned earlier, what I'm doing, how I'm doing it, the mistakes I made, the profits I made, in hopes that you, my audience, can see what I'm doing and learn from my mistakes as well as from my profits. Now, here's another example. Here's a real transaction record from my account history where I show an option trade that I did, a cash secure put, and I'll walk you through it and you can take a look at the profit I made. So this account, this small account had $250 in it. And I used that money to sell a cash secure put. You can see it's for stock symbol VRM with a $2.50 strike price and an April 14th, 2022 expiration date. Now, I submitted this order, or I sold the cash secure put on March 18th. So again, this is a 1-month cash secure put option contract. So it's like I said, it's all about generating this monthly income. And here's one of the ways I'm doing it. So I sold this cash secure put. It got filled that same day, and when this option contract got filled, the premium being paid was 25 cents per share. And so at the time that it got filled, I received a total premium payment of $25. Now, I admit that $25 is not life-changing money, but let's think about what's involved here. I sold a cash secure put. It had a $2.50 strike price, which means I have $250 reserved as my collateral, right? And I received $25 as the premium payment for selling the cash secure put. So if we just look at those, basic numbers, that's a 10% return on this 1-month option trade. So in this particular case, if we just look at return on investment percentage, this option trade actually did better than the first option trade, right? And maybe a lower dollar value, but from a return on investment standpoint, the percentages, this option trade actually did better. And so I want to dispel that myth that it takes a lot of money to make money. Well, here's an example where I had $250. Now, for some folks, $250 might be a lot of money, but it doesn't take thousands and thousands of dollars, I guess is my point, right? So with $250, I was able to get a 10% return. All right. So I think with that, I've talked about cash secure puts. I talked about how they work. And I also shared with you the strategy that I'm using, right? So I'm selling the cash secure put. And if the option contract expires worthless, I keep the premium and I keep the collateral that it reserved, which is awesome. But if the option does get exercised, I'll get assigned the shares at the lower strike price, right? In fact, for my example, I used at the beginning, I used Apple shares of Apple stock. Let's say Apple's trading at 135-ish, 140. But if I sell the cash secure put with a $120 strike price, that means when the shares get assigned to me, I'm going to be paying $120 per share. And I'm going to also receive that premium payment that I'll keep. So maybe we'll want to take a live example. I don't know. Let me check the chat real quick to see if there's any interest in something like that. Let's see. I got a couple questions and comments in here. Let's see. This one says, can you flip a 100K account, $100,000 account to $200,000 in a month's time? I've seen one YouTuber do just that, but not show the technicals of how to. I will tell you right now that I personally cannot do that. In fact, if I use my rule of thumb for making a profit on a monthly basis is, or what I try to shoot for is a 4% return per month. Okay. So if I have $100,000 in 1 month's time, my goal would be to walk away with $104,000. So that's a 4% return. 4% per month. If you annualize that, that's 48% in 1 year, which I think is great. If I could get 48% in 1 year, that'd be great. And I'll tell you right now, you're never gonna get that number because you can't always take the full $100,000 and invest it every single time. It's just the math just doesn't work out that even. It doesn't work out that well because you can't evenly do that. So for me, a more realistic return is, that 4% per month. Yeah, and so that's what I shoot for. I don't necessarily make it every time. Sometimes it's more, sometimes it's less. But that's my goal, is to get that 1% or that 4% per month. And so when you're asking if I could do it, turn $100,000 into $200,000 in a month's time, I cannot. Like I said, I think there's other people that might be able to do that. It's not me. I wish I could do that. I'd be doing that. I'd be doing that all the time, right? If I could double my money every month, that'd be awesome. I personally can't do it. Like I said, I try to shoot for 4% per month as my goal. So it would take me a while to actually double my money. In fact, using my numbers, after the first year, I'd only be up to 148,000. So I could get ideally a 48% return in 1 year's time. But in 1 month's time, I can only get maybe 4%. So that would be what I'd be shooting for. Okay, how about this one? This next comment says, I've been futures trading for the last 3 years, 60 to 70% consistent, but never trade options and don't know where and how to start. I just want to do it right. Can you please show how to place puts and calls? That's awesome. The fact that you've been trading in the market for a number of years, you've got that experience, which is awesome, right? So a lot of people that I talk with, some of the people that follow me on YouTube and in my Discord, they're actually brand new or really relatively new traders. I think a lot of people are investors, right? So people have retirement accounts, 401ks, TSPs, things of that nature, where they buy and hold stocks, which is great. I think everyone should be doing that, investing money for the long term. But actual options trading, that's something new for them. A lot of people don't have experience with that. I think the best place to start is take a look at my YouTube channel. I've got, I think I hit just over 200 free videos where I explain how to do the options trading strategies that I use. I've got basically 7 of them that I use, and in my videos, I show how to use them depending on which video, what the focus is of that video. But I go through and I show, if you're just starting out, here's how I would do a covered call or a cash secure put. Here's how to do a wheel strategy. And I start with the basics. I cover the mechanics of the strategy, and then I try to back it up with, here's a real life example, and I'll show actual transaction records from my account history, so you can see the profit and losses. And on the complicated trades, I'll actually show a spreadsheet where I lay out, on this day I did this, and on this next day I did this, and you can actually follow along with my trades, and you can see the profit that I made or the loss that I incurred, right? The end result, before or after expiration date, that I end up with the shares, did my shares get assigned, how much premium did I collect, things of that nature. So I think that's the first place to start, is take a look at my YouTube videos. If you have questions, that's what my Discord is for. Come on over to my Discord and ask me those questions, and someone, either myself or my team, we're on there. I'm not going to say 24 hours a day, but we're constantly on there and available to answer questions. So if you have a question about how to do a covered call or a cash secure put, or what do you think of this or what do you think of that, that's what we're there for. So come on over to the Discord as well. Ask your questions. It's an open forum. Not only myself and my team, but also like-minded traders. And I find that a lot of the traders there are very helpful with each other. So it's a great community to get information, to share information. Perhaps because you have a futures trading background, if a question comes up, related to futures trading, you'll be able to answer some of those questions as well. So it's a great platform to come and share information. All right, what else we got here? Orders on the platform. If I do before market opens and close all my positions before the market closes at the same day. Orders on the platform, if I do them before the market opens. Okay, so these are pre-market orders, and close all my positions before the market close at the same day. Yes. So if you're trading options, yeah. So this would be opening and closing your options trading positions on the same day, right? So you can place an option trade before the market opens. That's called a pre-market order. As long as the order gets filled, so there's a buyer and a seller. If you're selling an option and there's no buyer, well, then that option never gets filled, right? So you have to make sure the option contract gets filled that day. And then you can turn around and sell it. Or in the case where there's an expiration date, you can either buy to close or you need to actually wait for the option contract to expire. So typically with options, the way we do it as options traders, we like to specify a length or duration for the option contract, and that's specified by the expiration date. And we will either wait until the expiration date for the option to expire, or maybe it gets closer to the expiration date, and we do something called a buy to close out our position. Very rarely do you do a buy to close on the same day. So that's typically not how options trading works to your advantage as a seller, an option seller. I have done 1 day option trades. So let's say the option expires on a Friday. I'll actually sell or open an option contract on a Thursday, and then it'll expire that very next day, that Friday. So I've done 1 day option trades, and I've actually done some 0 day option trades. Well, the option expires on that Friday, and on the morning, kind of like what you're talking about, the pre-market open, I will execute an option trade in that morning that will expire that same day. Okay, so it has a 0 day duration, so to speak. And that's typically that's more typical of what you see, is that you wait for the expiration date or close to the expiration date before you actually do anything. It's not like a day trade where you sell a stock or you buy a stock and then you reverse whatever the transaction was before the end of the market. So options work a little bit different. Okay, let's see. This comment says, dude, you need an algo. Looking for those executing and kind of money machine grabbing the most, selling options against our capital cash investments. You need an algorithm. Looking for those executing and kind of money grabbing. Right. So I recommend that anyone that's interested in options trading get some education first. Learn about the mechanics, how they work, how you get into an option trade, how do you get out of an option trade. Because every time you get into an option trade, you want to have at least 2 exit strategies already figured out so that you're not caught by surprise, right? So if the market fluctuates wildly, you want to know beforehand what to do, right? So you execute an option trade, but you've got 2 exit strategies already planned out. And that's one of the things that I stress in some of my videos, is that, having that exit strategy already planned helps you greatly, because you're not panicking, you're not stressed out because of a situation. So you want to know that beforehand. But this comment is, you need an algorithm looking and executing those kind of money grabbing strategies, right? And you always want to evaluate an option trade against what's your risk tolerance. How do you manage the money in your account? How do you manage your portfolio? I agree. There's a number of things you need to look at. And I would never say for anyone to blindly go in and just do options trading. I think do some research, do some background investigation, uh, paper trade, right? So you can actually trade options without actually risking real money. Just trade it on paper, do it by hand. Pretend like you're executing a trade, but don't actually do it, and see what happens. How would you handle that trade, and have those 2 exit strategies already planned out, and see how they work for you. Do that for a while. Don't risk any money up front. Just get some practice in, and then when you're more comfortable with entering and exiting and the mechanics of an options trade, then you start off small, get some experience doing some options trades with a small amount of money. And then as you get more and more familiar and comfortable with the process, then you can start increasing your investment once you know what strategies work for you. So I showed you 7 strategies that I use. Maybe only one of those works for the way you like to operate, or maybe all 7 of them work for you. You need to kind of figure that out first before you do anything. All right. Let's see. What's a good delta range when looking to sell calls and you don't want to sell your shares to be called away? Also for cash secured puts. So when I sell covered calls, I'm typically looking for, say, a 30 delta. And that's the probability that the strike price will be reached or one of the ways you evaluate a delta is you look at it as what's the percentage that that the strike price will be reached for the option, cash secure puts, right? So maybe I could show you a real example, and I'll show you the delta. Um, I don't always have to look at a delta. Like I said, I'm doing simple option trading, so I don't necessarily need to look at the Greeks to understand whether or not I want to get into a trade. So that's one of those things, right? It's a balance, right? How much do I want to know and really invest myself or invest my time versus, you know, I've got a pretty good trade. Getting 80% profit might be enough for me, and I don't need to worry about the deltas, like the theta and things of that nature. So it's kind of a trade-off there. All right. Let's see. If 4% is the monthly goal for the whole portfolio, then this number becomes your go no go for a particular trade. When the premium is too much to be good. Um, it's not necessarily a go no go. What it does is it's one of the criteria I look at. I've got a video on, or I may have one or two videos on my YouTube channel where I talk about 8 simple rules for picking stocks and options trading. And this is just one of those criteria, right? So if I think that the premium is, or the percentage I could make from an option trade gives me that 4% return, that's a check in the box that says, you know what, I'm look more seriously at it. There's other factors that I need to take a look at that would influence my decision, but that's definitely one of the things I look at. If the return is too low, let's say it's a 1% in that month, I may not do that trade just because there might be a different trade where I can get 2%. So it would be more to my advantage. All things being equal, if I had two trades and one gives me a 1% return for a month, and the other gives me a 2% return for the month, all other things being equal, I'm going to take that 2% because I am looking to make a profit. And if I can make 2% versus the 1%, or in my case, the 4% versus the 1%, I'm definitely going to go for the higher number. Okay. And that's, I've got some worksheets that I use that I've shared in my videos. You'll be able to see in my videos how I actually do those calculations that help me arrive at the decisions that I'm looking to do. Let's see what else we got here. This one says cash secure put would have piled you with stocks at ridiculous prices comparing to the cutoff. So long-term selling Apple sounds logic, but that won't work with any stock. I agree. Every stock is different. Every situation is different. Market conditions obviously factor into it, right? So if we look at the market conditions today, in fact, I wanted to go a little bit into that. It may not be the right time, right? So if the conditions are poor, I'm not going to sell a cash secure put. I may not do any option trading. And not every stock falls into you can do this with. You have to look at the individual stock. You have to look at the industry and the sector. You have to look at where the company position is, how they are financially, where they're reporting, what's the technicals involved, right? So are they trending up or trending down? You want to look at the fundamentals. There's a number of things you have to look for. You can't just blindly go out and do options trade. So I agree with you completely. Let's see. Let me come over here. Yeah, so if you've got more questions, you can ask me and my team over in my Discord. Oops, let me get rid of that here. You join me over at my Discord, and there we go. You can join me at my Discord. I could actually get rid of this one, huh? Join me at my Discord, ask those questions, and I'd be happy to, between myself and my team, answer those questions for you as we move forward here. And long as I'm here, right? So part of what I provide in there is announcements. So I talk about different news events or market conditions that I think are pertinent to our options trading, right? So we as traders, we need to know what events, not only to a specific company, maybe to the industry or the sector, global events, geopolitical, financial. We need to know some of those things, and so in my announcements channel, I talk about some of those things that at least I'm looking at that I think is important enough for me to share with all of you. because I think they're important and could actually decide one way or the other whether what we do. Whoops. I also share the stocks to watch. What stocks am I watching? I do a lot of research, and as a part of that, I'm more than willing to share my research with my community. And so, along with the news that I'm providing, I'm telling you what stocks I'm going to be watching the upcoming week, or maybe it's for today. And as a part of that, I'm gonna, you can think of these as trade alerts, right? So these are the stocks I'm watching. If these certain conditions are met, you know, I'm probably going to execute this trade, and I'll share with you what the trade is, right? Am I going to do a covered call or a cash secure put or a leaps option or a credit spread or a debit spread? I'll share that information on my Discord, and it's available to anybody that comes on over and takes a look. And it's the Key Insights channel. And then after execute it, I'll publish my trade. That way you could track actually what I'm actually doing, what trades am I actually making. And what I'll do is I'll take a screenshot of the actual transaction record. So I'm not just telling you I'm going to do it. I'm showing you the actual transaction record where I actually do it, and I share the information so when I did it, how much I did it for, what type of option trade was it. And so if you wanted to, you could track my progress, see what I'm doing, and maybe that helps you in the future. I don't know. Like I said, I'm not recommending anything. I'm not advising. I'm just sharing some of the trades that I'm doing. But I think the biggest benefit is the fact that I've got an Ask Jim channel where you can ask me questions. So if you got questions about how a trade works, or what I'm doing with this particular stock, or what I think about this or that, this is a great forum for you to go ahead and ask those questions, because I think it really can be helpful knowing all that. Let's see. Let's go over back to the comments, see if we've got any more questions. Looks like we've answered most of them. I don't see anything else here. So awesome. I've got 14, 15 people here. That's awesome. Thank you so much for joining me here. I'm gonna hold another live webinar training session, if you will, next week. I don't know if it's gonna be Monday or Tuesday. I'm trying to figure out what's the best day. Last week I did it on a Monday. Today's Tuesday. It actually works out better for me on Tuesdays, I think. But what I plan to do is next week I'll hold another live training session or a live webinar. You can ask questions. I'm going to have another topic. I'll probably go over um, maybe the wheel strategy or leaps options, or maybe how to pick stocks, something of that nature. Haven't quite figured it out yet. Um, but great opportunity for me to share information in more of an interactive format. And you can ask me questions as I go along, right? Just like we did here. Type your comments in. And in the meantime, I really appreciate all of you coming over here. Let me give you a quick. There's that link again. I had a comment asking me about that link again. So if you wanted to come over to my Simple Trading Room community, my Discord channel, there's a link there. It's discord.simpleoptiontrading.com. Come on over, get those questions that you have answered, find out the news, get my stock picks and my trade alerts, and actually find out what my real trades are. That's probably even more important. But I think the most valuable thing is get your hands on access to me through the Q&A section, where you can ask me questions, and I'll try to get back to you. Me and my team will try to get back to you as soon as possible to give you the answers to your questions. All right. Let's see. Any more comments? Oh, it looks like I might have another one. Yeah, so that's the Discord link. So I shared that. This one is leaps. Oh, okay. So that's a request for my next session, maybe doing leaps options. So long-term equity anticipation securities. That's always a great topic. And the next vote is, I also show a vote here for the wheel strategy, which is also a great topic, right? And in fact, because we already we already discussed covered calls, and we discussed cash secure puts. We've got the basis of what we need for executing a wheel strategy, which is a pretty awesome strategy because it allows people to make money, or allows traders to make money by taking the output of one strategy and using it as the input for the other and just repeating that over and over. It's a great strategy for making money. So I'm excited to maybe do that one. So looks like wheel strategy or maybe leaps might be my next session that I get involved with. All right. So again, thank you so much. Come on over, join me in my Discord. It's discord.simpleoptiontrading.com. And I'm looking forward to seeing all of you next week on my next live session. And if not, hopefully I see you sooner in my Discord. Become part of the community. And really looking forward to working interactively with all of you, sharing information, trading ideas, and things of that nature. All right. Thanks again. I appreciate all of you. I'll see you next week. Bye for now.